Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope all of you had a very good day and a very beautiful week of trading as well. And in today's markets, guys, well, the bulls putting in another day of green. However, we were still confined between the levels that we established in yesterday's trade. Take a look right here, SPY inside candle and the QQQs as well. So although we didn't have any major level breaks today on both of those indexes, as a whole, it was a very nice day of broad market rally. A lot of the names ending in the green, a majority of the S&P 500 ending in the green as well. Now, in today's video, we're going to cover a few things together. Number one, I have one corporate earnings prepared for you guys, and that is going to be American Express. So we're going to go over their numbers and see exactly what we can determine from the health of American Express consumers, which tends to be towards the more affluent segment of the economy. We heard from Louis Vuitton earlier in the week, and they were saying that spending across luxury goods was coming down. So now we get to hear from one of the credit card issuers that does the most business with these affluent clients and see what they continue to spend their money on. Thereafter, guys, we're going to go through our major technical analysis rundown of our major stock market indexes, followed by our big tech names, see if there's some deals to be had in the market, or if it might just be a little bit prudent to wait on the side with the markets continuously pushing the all-time highs. And lastly, of course, we're going to do a portfolio update to show you guys the trades we made throughout the week. As a whole, guys, very good week of trading. Here's the recap from our Discord. So myself and all of our Discord members having a very good week of trading, and I'll let you know which positions I still have for the next upcoming week. So all of that being said, guys, let's get into today's video. SPY up a nice 0.38%. The QQQs up a nice 0.66%. And when we take a look at the heat map here, guys, you'll see that for the most part, it was a very broad market rally today, right? Big tech, fairly decent numbers, although no massive outperformance. Semiconductors, largely the same. Mixed, but no massive outperformance. And that was kind of the theme of the day, other than really the Netflix trade right here, which is a byproduct of their very good earnings yesterday. There wasn't really much outperformance in the markets today. Financials kind of just doing their things, a little bit mixed. American Express earnings, we'll go over those. And the bottom half of the market, not having a bad day at all, but still no massive outperformance. Just very steady gains to the upside, right? The market just grinding a little bit higher. Now, in terms of the one-day relative, you can see that even better, right? Everything in the green, but no really bright green on the day. To the downside, energy once again. We know that energy is, in terms of seasonality, fairly weak during the months of fall. And that is a very logical trade, guys, for energy, right? It stands to argue that the summer period is the most heightened period of demand for the oil sector as a whole, right? Think of people traveling a lot more, taking a lot more vacations. So think of airlines and also car travel, but also what happens in the early spring into summer is the whole agricultural season, right? And then when that ends in the fall and people go back to work, the kids go back to school, people stop traveling, and obviously the agricultural season wraps up, well, you have less demand for oil in the fall months, and then it kind of picks back up in the winter months as you resume demand for heating oil services for the portions of the world that experience a winter climate, of course. So very, very logical that energy continues to be a little bit weak in terms of the seasonality. 1 week relative, everything pretty much to the upside, except for healthcare taking a little bit of a dive after some of the major healthcare players, health insurance providers, were a bit weak after their earnings, and energy, your major loss leader of the week. So before we get into more technicals, guys, let us dive into American Express earnings. And as a matter of fact, they were actually very, very good. Despite the stock coming down after their earnings about 3.15%, the earnings were actually very, very good. So let's take a look at the numbers right here. Beat on the bottom line, which is very important, by almost 6%. Very good beat on EPS. And a ever so slight miss on revenue. So why was the company down 3% and at one point down about 5%? Well, it all has to do with the guidance, guys. So we're going to take a look at their earnings report and see what we can determine from this earnings conference, right? So here is your summary. In terms of total revenues, they were very, very, very strong, guys. 8% year over year. Extremely good. That is standard with what American Express usually does, between 8 to 10%. So this time, no different. Net income, 15% net income, guys. And that is traditional with American Express's fashion. You can see in the most recent few quarters, 5 quarters, and the last 3 years, they've been oscillating between 13 and 16%. So 15% right here at the midpoint, that is still a very strong number. And in terms of your total billed business, Well, here is where we're kind of flatlining, right? A little bit flat, so we're not seeing tremendous amounts of growth. That is natural. We're in a bit of a weakened economic cycle right now, so I wouldn't be expecting to see ridiculous amounts of growth, but for them to still be growing their build business by 6% per year, it's very good. Shows the business is still growing. U.S. consumer services build business is one of the weaker segments as the U.S. faces economic constraints right now, of course, as a byproduct of heightened interest rates, which has led to reductions in demand and consumption. In terms of commercial services build business, well, down to about 1%, but they've been roughly the same for the last 5 quarters. Wouldn't say that there's much of a trend to be established here. International card services is where you have your highlights. Those are still growing extremely strong, guys, at about 13% per year. That is quite fantastic. Now, let's move on to here, guys, whether or not the consumer is healthy in terms of their credit worthiness. Well, here is your amount of clients that are 30 days past due. Pre-pandemic was 1.5%. Now take a look at the last 5 quarters. Does this show that we are on the brink of economic collapse and that American Express cardholders are so overburdened with debt that they don't know what to do with themselves? Well, actually, no. You can see everything is below pre-pandemic levels. In terms of net write-off rates, so how many people are just choosing to not pay their credit card bills at all and default on their debt? Well, as you can see, guys, we are still below the pre-pandemic levels. And we've been tracking every single one of these American Express earnings releases together for almost the last 2 years. And this has always been the case, guys. So nothing is falling off a cliff just yet. So we keep watching for these things, guys, but we've now done a few different company earnings and nothing points to the fact that business is absolutely falling off a cliff and that consumers are overburdened with credit or debt right now. So take it from the largest companies in the world, guys. And of course, over the next few weeks, we'll get to hear from Visa and MasterCard as well. Total provision for credit losses. Is the company worried that in the future, it will have to put aside more and more capital for these people who are either 30 days past due or the people who just don't pay at all? Well, total provision, you can see here, not any significant heightened amounts, right? This amount will go up naturally just as a byproduct of the amount of people that use American Express's services, right? As they gain more and more clients, they keep these reserves as a proportional amount to the number of clients that they have. But as long as we're not seeing this spiking, guys, this is good. Where have we seen these numbers quite similar in the last week of trading? Well, every single one of your bank earnings, none of them are provisioning for excessive losses in the next few months. So it has to be noteworthy there, right? Now, in terms of your discount revenue, this is the amount of money American Express makes every time you swipe your card, also known as the merchant transaction fees. That was up 4%. Net card fees is the amount that you pay per year to be an American Express cardholder. Sometimes it's $100 a year. Sometimes it's $400 a year for the platinum or gold cards. That is up 18% per year. So it just goes to show you that their consumers are growing. This is not just because they increase the rates on their cards. No. They're actually growing their actual card members too. Service fees and other revenues. Well, that is when you are a American Express cardholder and you have, they have obviously tons of points schemes to where you can redeem your points for trips and all that on the American Express travel website. And in the event that you don't have enough points and you pay in addition, well, obviously they make money from those services that they provide to you. Process revenue is very, very small. Not going to talk about that. Net interest income right there. Well, that is the amount of money that the company makes from people who hold balances past the, or actually people who hold any balances, right? If you carry your balance forward 1 month to another, then the company generates a certain amount of interest. That is up 16% year over year. All in all, guys, it's business as usual for American Express. There is literally nothing fancy in this report. No major red flags, decent capital requirements. Look, they're keeping they're keeping a decent amount of capital, right? Regulatory minimum is 7%. They're keeping about 10.7% in required equity capital to serve any debt or any unforeseen debts that may arise as a byproduct of a weakening economy. And here's your 2024 guidance. The reason for the drop, right? The original guidance was 9 to 11% revenue growth, the midpoint being about 10%, EPS 12.65 to 13.15. Here's your updated guidance. Revenue growth, bottom end of the range, right? So they can't get 10, they can't get 11. They actually guided for 9 for the remainder of the year. But EPS though, look at this net increase in guidance for EPS. So the company, even though the revenue is not growing maybe as fast as Wall Street would like, the bottom line profit margin definitely is. So looking very good there. Nothing fancy to see from American Express. And if you're curious into the health of their customers, well, let's have a look at what the CEO had to say in response to one analyst. Donald Fandetti asking here, Steve, the general consensus pretty much among everybody is that the affluent US consumer is in good shape. I just wanted to get your sense if you are seeing anything in your data bookings that would raise concern around the sustainability of that. You've got an election coming up and things of that nature. So talking about the macro environment right now, election uncertainty, all that things. Look at what the CEO had to say. Our customer base is very different than our competitors' customer base, and it's really resilient and pretty stable. I think that they are continuing to spend, albeit not at levels that we saw coming out of the pandemic, but the US consumer, just to pick the US consumer, has been really stable. I mean, it's just been around 6% for the last few quarters, and if you look at the international consumer, and a lot of people forget, we do have the international side of our business, international consumer business has been growing 13% for the last 4 quarters as well. So we are not seeing anything that would indicate that spending would go down, and we are not seeing anything that would indicate our credit metrics are getting any worse. In fact, you saw write-offs go sequentially down, and so we do feel good about the consumer. So there you have it, guys. I went through these earnings transcripts from almost all of the banks and now from American Express, right? So take it from them. Don't take it from the data that you might see me sometimes go over, right? The CPI, the jobs report, stuff like that. If you want to get actual insights into the health of the consumer, well, you have to get it from these companies who have millions and millions and millions of clients across different income levels, right? And American Express does not see a problem for their consumers. But then again, of course, they're known that 60 to 70% of their customer base is at the more high income tier level of the economy, of course. So now let's get into some of the metrics for Air American Express. Is it a good deal to buy now? Well, let's have a look at the nature of the company, right? In terms of financials are looking very good. Net profit margins, always between 13 to 16%. Not as good as Visa and MasterCard, but that's because American Express holds its own debt. MasterCard and Visa do not. They are only payment processors. American Express kind of acts more like its own bank and holds the debt on its own books. That is the major difference between Visa and MasterCard and American Express, right? Now, moving on to EPS growth. As you can see, very healthy EPS growth for the next 3 years and very healthy revenue growth as well. So the growth profile of the company is looking good, but analyst estimates as well, guys, are saying that we may be approaching full value here. And I would tend to agree. Let's look over it real quick. So revenue growth, 9.8% per year, EPS growth, 13% per year, which gives them a forward PE at $277 of 19.9. Now, 19.9, guys, in terms of the forward basis, it is a little bit high in terms of the company's history. You can see that usually the company trades anywhere between a, let's call it 15 to 17 forward PE. So it's a little bit high in terms of the forward PE basis. In terms of the PEG ratio, they're growing EPS nicely. So we take 19.9 divided by their EPS growth rate, we get a PEG of 1.53. It's not very cheap, but it's also not expensive, right? Anything under 1 is good. Anything over 2 is expensive. 1.53 is just that, decent. But the free cash flow yield, guys, 11.5%. This is insanely good. Usually we look for about 5%, which would be a very good number. So for them to be over double the standard minimum that we are looking for in companies, that is very, very good. I'll give you an idea. Visa and MasterCard free cash flow yields are sitting at about 2.5% to 3.5%. So significantly lower than American Express. This is very good. And what do they use all of that juicy free cash flow yield for? Well, yes, they do pay dividends with it, but not that much, right? Only 1%. So what else do they do with their cash, guys? Well, they do a ton of buybacks. Take a look at this buyback curve, looking very good. And that's how you get EPS to go up. And that's how you also get your share price to go up as well. But in terms of where I stand on the company, guys, even though the fundamentals are fairly valued, I wouldn't say the company's at a good deal right now. We talked about this one last earnings cycle, and I was saying down here in the 220s, it was a great deal. And you may remember me from last year, I was saying buy this one all day down here and don't even worry about it. Warren Buffett is a big fan of this company too, by the way. But now, guys, we're coming into monthly overbought conditions right now, right? So I will possibly be expecting a little bit of a monthly pullback eventually. That's not the case right now. Weekly still looking good, but I will be looking for a weekly pullback. If we can maybe come back into the 260s, let's call it, right? So right around that 260 level could be tempting for a breakout. retest, and further run. So this would be an area for a little bit of a swing trade and also possibly to add a few shares to the long-term portfolio. But for now, for me, this one in terms of a long-term investment, I'm not adding up here. I wouldn't be selling up here either. It's just kind of a hold for me. So that's kind of how I look at American Express. Decent earnings, business as usual, and no major red flags out of the company. So now that that's out of the way, let's cover our S&P 500 and the rest of our indexes. And we'll do these relatively quickly because not much has changed, right? So context of the SPY is still in a very nice daily uptrend right now. Daily higher lows are set, and we're going for the continuation of the daily uptrend. But pay special attention. If we flush these lows from Wednesday over the course of next week, that will be loss of the daily uptrend. It will be daily downtrend underway, and we will start possibly a form of weekly consolidation. Keep in mind, guys, it's now been 6 weeks. 6 weeks of up in a row, and usually after that, you can tend to get a few weeks of possible sideways or downside consolidation as we continue moving through this earnings season. So just understand that in the event we lose the daily, tons of support below us here, guys. First stop is going to be the 574 level. Prior resistance should be newfound support. And if we flush even further with the daily, just understand what we're looking for here. Looking for the weekly higher lows for further trend continuation. The larger area of support that I'll keep an eye on, 565 down to about 560. This prior resistance, newfound support, and right around the 12 EMA. Moving on to the QQQs right now, also not looking too bad, guys. Looking very good. Daily uptrend clearly in motion right now. Higher lows are set. And now we need to watch out, guys, right? Because if they do not breach the higher high and then breach the low of Wednesday's trading, that would be a confirmed daily downtrend. And then we will be heading into weekly consolidation, right? Now, where's our support levels for that weekly consolidation? Well, you can see them right down here, right? This area of congestion, previous resistance becomes newfound support, and that's going to be roughly 483 down about 476. The 12 EMA is sitting right there as well. So possibly just a little bit of a weekly back test and maybe run a little bit further as we move into the end of October and more favorable November and December seasonality as well. September and October were supposed to be bad months seasonally for the markets, but you can see, guys, we really didn't care, right? So November and December are supposed to be good for the markets. Are we going to get flipped? Are we not going to get flipped? We will see. We'll take this one day at a time, as we always do. Moving on to XLF financials right now, having a very good showing off the back of those AXP, off the back of the bank earnings and not the AXP earnings was what I meant to say. So moving up very, very nicely, guys. And as soon as this move is topped out, we'll just be looking for a daily higher low. Gorgeous daily uptrend, full control by the bulls right now. So keep an eye out, guys. And when we do pull back, look at the size of the pullback. Obviously, if we pull back this entire move right there, well, it's not going to be looking good for the V-shaped recovery, right? At that point, either we're going to get the lower high into lower low, daily downtrend flush, or the bulls will have to recapture this in the two-step process. But one thing's for sure, if we lose this daily downtrend, understand who's in control of longer timeframes here. Weekly bulls are in absolute full control. Just gonna be looking for a weekly higher low for further trend continuation. I would be targeting this area for a pullback right here, about the $45.9, $46 range. The 12 EMA is gonna be curling up into that region as well. So just gonna be looking for a little bit of a weekly pullback in the event that the daily bulls kind of give up here and roll over a little bit. Moving into healthcare, healthcare is really at a battle right now. So we know that the context was a daily downtrend. We finally got an engulfing move, creates enough space for the bulls to set up into a new daily uptrend shift. But they've been kind of struggling here to round the corner. Take a look. Usually we look for the recapture of the hourly uptrend. So far, we have not got it. They have a chance to get it into Monday. And if they do get that hourly uptrend, guys, you know that daily consolidation is finished and we're looking for a second leg of rally higher, possibly eclipsing the previous highs and getting us into a new daily uptrend. If they confirm the daily uptrend, you can say for sure your weekly higher lows are set, and then we'll be looking to undo this weekly downtrend as well by probably going into a two-step recovery process on the weekly. So keep your eyes peeled as to how we start moving in that direction. In the event we fail and move lower, we'll just understand that's just looking for a weekly lower high into lower low, and eventually the bulls will need to reset a little bit lower. And at that point, we'll just be looking for a monthly higher low for further trend continuation. The massive level, guys, is down here at about 146.73. Confluence with the monthly 12 EMA. That's a big time frame. Now moving into SMH, give me a very brief second. Moving into SMH, down about 0.03%. No action on the semiconductor trade today, right? But they're not looking too bad. We're kind of in a tale of an in-between story, right? I think I erased all of my all of my levels right here, right? So let me just redo them real quick. So we got one big level right here. We know that already. That's our overhead resistance zone that we're trying to get through, right? So, and then we also have a very big one down here, which is going to be this area right there. So in terms of this right now, guys, we are still getting slightly rejected. You can move it down a little bit, right? We did crack through it a little bit. So still getting rejected. Our area of resistance right now, it's been proving to be a bit challenging for the bulls, right? Resistance here, and now once again. That being said, the context is a beautiful daily uptrend right now. Daily higher lows are set, but you can see the bulls have been struggling in this zone. Keep an eye on the lows of Wednesday. If we flush the lows of Wednesday, your daily uptrend is lost. You get the daily downtrend. At that point, you're just looking for very healthy weekly consolidation at this point, guys. Anything above 214, looking for the weekly higher low for further trend continuation. And I will be looking down here, guys. The previous support level, 240 down to roughly 231, could be a good area to kind of play your favorite semiconductor names. And the way that I'll be playing this once again is using my favorite strategy, selling puts under the market, benefiting from the heightened volatility in the semiconductor sector. So that's how I love playing this one myself, but not looking too bad just yet. Just watch the direction and at which this breaks. Obviously, we break to the daily uptrend. Well, then your weekly is simply just continuing, similar with SPY, similar with QQQ as well. Moving into the Russell not looking too bad, but once again, getting stopped out by our resistance level. We know this one is a big one, guys, right? 2020 and 2021 all-time highs, acting as resistance once again. This is now roughly the third or fourth time that we're struggling to get through this area. However, the daily bulls are in control right now. Beautiful move higher. Any move lower going to be looking for a daily higher low for a possible second attempt at breaching through this range. The weekly is also not looking too bad at all. With this weekly close, guys, we now have a weekly confirmed uptrend. So not looking too bad. Even if the bulls lose this on the daily, a lot of space, guys. Anything above on the weekly, 215, looking for a weekly higher low for a possible second attempt. So it'll be up to the bulls, guys, to break through this area in the next 2-3 weeks of trade. If we cannot get it done, then we're probably just going to get relegated back down here to roughly the 213 down to 208. And if for ever which reason, guys, we revisit this area, this is where I'll be looking to play the sector a bit more aggressively myself. And now lastly, the Dow Jones. The Dow Jones not looking too bad, 0.09% to the upside. So I'll remind you of the context, right? Beautiful daily uptrend is simply continuing at this point in time. Higher lows are set right here. And now we're just looking for the daily trend expansion. In the event we cannot break these highs, because now it's kind of like a triple top, right? If we don't break them and break the lows of Wednesday instead, that would be a rollover of your daily trend. Daily downtrend would be underway. And then what are we looking for, guys? You should know it better than me by now. We're looking for the weekly higher low for further trend continuation, right? And that aspect, or that level rather, that's going to be coming into play is going to be roughly the 41,800 for your first line of defense. That is the 12 EMA, looking pretty good, guys, for the good old breakout, retest of the range, and possibly run for one further. So no red flags. All of our major indexes and sectors, guys, all looking quite good. No major red flags just yet. The bulls control every single time frame on most of these sectors. So we'll keep a close eye on it one day at a time. But as of right now, the markets are looking quite decent. Now let's move into our big tech names, shall we? So big tech, Apple up 1.23% today. And now Apple looks like it does want to go for it, right? So not looking too bad. Daily uptrend is set. Higher lows are set, and now looking for the trend continuation expansion. So looking quite good. We will see one last line of defense, right? Over here at roughly the 237, which is also the level we topped out on the Tuesday session. Break 237, brand new all-time high for Apple. And Apple's looking decent now. We're putting in some space with a solid candle close above our big area of resistance that was here, right? 232 down about 228. So we'll see how this one goes one day at a time. But the bulls definitely looking good here. And the key time frame is the weekly. This is now the first confirmed weekly uptrend on Apple since all the way back here, right? They could not get it done. We couldn't get any follow through. Triple top right here. This is not a weekly uptrend. We need to close some candles at the higher highs. Couldn't get it done where it's tightening up. And now finally we get the break. So nice continuation pattern from Apple. I would not be surprised, provided the markets are still bullish next week as well, and we get good earnings out of big tech, of course. Well, Apple should have no problem in continuing towards the all-time highs. Your next psychological area of resistance is going to be about 250. For me, as of now, guys, Not much in terms of a trade, but in the event we get a little bit of a dip, I wouldn't be opposed at this point since we now have a clean break at a larger level to play off of and a confirmed weekly uptrend. Well, that's different, right? So now we can make an attempt at possibly playing some short puts, maybe down here, right? 225, 222, this area right there gives us a good cushion prior to us an assignment and gives us a bunch of bullish support to base our trades off of. So that's how I would make any short-term trades on Apple. In terms of buying it for the long term, not the biggest fan up here, guys. The PEG ratio is extremely high. As a matter of fact, it's now 10% than it was back here. I'll redo this after earnings. I mean, I can do it right now, but just add roughly 10% to this number because of the share price increase, right? So now we're probably sitting at about 3.4 PEG, and that's very high, even for Apple, which does traditionally trade rich. So that's why I'm holding the long-term shares I have. I'm not buying anymore. I'm just not selling anymore. I'm just holding. I don't think that it's the best in terms of company valuation up here at the current levels. Moving into AMD. AMD, guys, struggling, right? So very unfortunate for AMD, not able to get it done, but the bulls are still playing defense. Look at the last 4 days. The way are they playing defense, guys, in a very crucial level, right? Previous support, big congestion as well, resistance. So this area here, the 162 down to about 155, very strong level, and we are playing with all the moving averages right now too. That being said, the context is right now big move down. We lost the daily uptrend. That is very unfortunate. Cut the lows, and now the bears are making an attempt at setting some lower highs and going for the daily downtrend flush. If we lose 155, that is the official daily downtrend flush underway here, guys. And at that point, you're just looking for further weekly consolidation. But the weekly trend is where it's most clear, right? Beautiful weekly uptrend is in motion, looking for the weekly higher lows for possible further weekly trend continuation. The valuation of AMD, guys, is quite cheap. And I will remind you of the thesis, right? This quarter that we're about to see their earnings coming up in just 2 short weeks, this is supposed to be their expansionary phase quarter where they start competing with NVIDIA with their data center products. Look at this EPS difference, all the prior last 2 years. And look at this EPS ramp coming in the next 4 quarters. Look at the annual EPS ramp coming 2025, 26, and 27. Revenue, same thing. You can see a net increase in revenue coming in the next few quarters. And on a yearly basis, you can see that revenue ramp as well. So AMD, still relatively cheap in terms of their future growth that is expected to come from the company, right? So at this point in time, my preferred way of playing AMD remains the same thing. Next week, I'll possibly be looking to sell some short puts in the mid 140s. I think the value for AMD down there in the mid 140s is quite attractive. And at that point, we are still looking for a weekly higher low. So I'm looking to play for the weekly higher lows down here. If they pick me up, I'll hold for a potential bounce and trend resumption opportunity. Now, moving into Amazon. So Amazon up about 0.78%, fairly decent day for them. And they're trying to get the breakout here, guys. I'm not too sure if you can see it or if my box is maybe a little bit not transparent enough. Let me try to fix that for you guys. I didn't make it too opaque, I hope. So this is the resistance range, right? 190 down to about 188. And we can see that Amazon bulls are having a hard time with the level, but they're not giving up. It's not as if we're rejecting and coming all the way down here, right? They're trying to stay as close as possible, trying to get this daily uptrend to really crack through this area of resistance in a big way. And the bulls made an attempt at it today, but could not get the job done. That being said, daily higher lows are set right here, 184.71. Keep an eye on this level, guys. Daily higher lows and going for the daily uptrend because they had the daily downtrend here. We were looking for the weekly higher low, which we found. And now the bulls are looking to convert into a new run towards the 190s and then eventually the all-time high 200 range. Amazon looking quite bullish, but in the event we fail this level right here, and once again, the bears recapture the 185, well, unfortunately, new daily downtrend, and we will just once again embark within this big area of consolidation, keeping an eye on the lows. 180 to 175, guys, 180 to 175, but we can retest that from Amazon. Still at that point, going to be looking for a bit more consolidation, and I will be a big fan of playing short puts aggressively on the company, but also possibly going shopping for leap call options for the company as well in the 180 to 175 range is my desired zone. Now, moving on to Google. Google doing a whole lot of nothing. And as a matter of fact, Google really hasn't done anything for almost the past month of trading at this point. The one pattern that catches my eye, though, is this inverse head and shoulders, right? Which is forming the base of the shoulders right around the 200 daily moving average. And the 200 daily moving average is not a small thing for Google. Usually when we get multiple touch, this is the this is the absolute disaster that happened early September in the markets. We flushed there, but usually when you buy at or below the 200-day EMA for Google in the context of an overall bull market, 2022 is not an overall bull market. If you go back in the context of prior bull markets, just go back in time and see, right? Usually every single time we touch the EMA, here's COVID. Every time we touch or go slightly below the EMA, 200 EMA, it's usually always a good buying opportunity on Google stock. If anything, the stock right now is extremely cheap too, right? It's about a 1.14, 1.2 peg right around the current price. So I wouldn't rule the bulls out just yet, right? Even though the short-term price action is quite messy, the bulls are looking to set the daily higher lows, looking for the trend change, looking to protect our short-term moving averages under us right now. Even though it's quite messy right now, I still love Google at these prices, don't get me wrong. And in the event we retest, guys, the 160s, I'll be looking to write some short puts aggressively in this location, possibly with about 30, 45 days worth of time, and also probably go shopping in the event we plunge below 160 all the way down to about 150. This is the area that I'm going shopping for even more leap call options, 1.5 years worth of time on it, because I really believe in Google's recovery story. As a whole right now, though, I'll remind you the context. Weekly downtrend, the bulls put in a very nice weekly engulfing move. We're just looking for the weekly higher lows, guys, for the possible weekly trend change coming into late October and November as well. Now, moving into Meta down, about 0.08% today, roughly flat on the day, but we know what Meta is doing. They are in a daily downtrend right now, which just leads us to believe that they're in the process of having a little bit of weekly consolidation. After 4 monster weeks of rally, blasting through the all-time highs, it's time for Meta to take a little bit of a breather on the weekly. So at this point, just looking for the weekly higher low for possible further trend continuation. The bulls control this chart 100% of all time frames. Monthly control, weekly control, and daily. Although it is a daily downtrend, we understand the context is just looking for the weekly higher low, right? So at this point in time, guys, if we retest the 545, which is about the 12 EMA as well, and your previous all-time highs that we were struggling for with a while, well, I'll be looking for the good old breakout, retest and run trade, usually a high probability trade. So if you do retest this general zone right there, I'll be looking for some longs on Meta. But as a whole, guys, not looking too bad. We're using a bit of this area for some price action support. So we will continue to monitor the size of the dip on Meta right now, but it is looking for a bit more downside follow through that for the bears is possibly likely. And as I said, guys, I'll be patient. I'll be waiting for this one. 545, 540, I am going to be all on top of it. Now moving on to Microsoft. Microsoft also doing a whole lot of nothing in the past 2 weeks, right? And that is completely fine for the stock, guys, right? Even though the stock price is not moving. Is Microsoft improving their fundamentals? Well, let's go over this real quick, right? So what have they done over the past few quarters? Increasing EPS every single quarter on a yearly basis, increasing EPS every single year. Revenue, increasing revenue every single quarter, increasing revenue every single year. So the stock price is also below all of the analyst price targets too. This is where I like buying these companies, guys, when they have been consolidating for the entire year so far. This stock is in a rare fashion, underperforming the S&P and underperforming the QQQs, despite being one of the largest weights in the entire index and being close to the 200-day EMA. This is where I love buying these companies, when they are sideways in an accumulation range, guys. This is a range of monthly accumulation, and it does have a bullish leaning penchant. So that's why I'm looking to build more and more positions in Microsoft. The price action as of right now is very messy. The bulls are trying to go for a daily trend change, but they cannot get it done. We are trapped between two levels right now, between this area of resistance, 425 up to about 435, and the lower zone of support, which starts at about 405 to 400. So I have been taking a few positions on Microsoft here, just because the weekly time frame shows that we are trying to set up for some weekly higher lows to possibly make a second attempt, or third attempt rather, at this big range of resistance above us. However, in the event we fall, possibly before earnings or during earnings or after earnings, if we retest, guys, 405 down to about 390, I will be loading up the bag with some very juicy leap call options that I've been very patiently waiting on Microsoft so far. I loaded up on one of them this week, but I'll be looking for a lot more if we come down here. Moving on to Netflix right now. Netflix as well, right? Up 11% on the day, brand new all-time high. One of your leaders on the day, of course, the biggest leader in the entire market today, in terms of the S&P 500 at least. So was it looking the best for the bulls yesterday, right? We kind of lost the daily uptrend, flush of the lows, retesting our area of support, 700 down to about 672. And then, of course, earnings just completely reversed everything. So now the bulls are back in full control of the daily here, guys. The next area of psychological resistance, of course, is going to be the $800 mark. And at this point, guys, any move lower for the bulls, going to be looking for the daily higher low for possible further trend continuation. Obvious levels of support coming up are going to be the previous all-time highs, 720 up to about 730, this $10 range. The moving averages will probably be curling up into there as well. So that would be the first line of defense that I'd be looking for to pull back. Very tough for me to chase this one at this current time, guys. If you were in before and you're holding right now, I see no reason to be nervous about the stock. It had very good earnings yesterday, but starting a position up here and chasing the trade is definitely not my style. Can it continue moving higher? Yes, and you only need to look no further as earnings just a few quarters ago, right? That had a nice 15% pop, and they continued for 3 more days before consolidating sideways and then gaining more and more levels. So this could be somewhat similar, but it's just not my style to buy up here and hope for the continuation rally, even though the short-term timeframes, nothing wrong with them, looking good in terms of maintaining the hourly. I would prefer much more prefer to see a retest of the lower levels, give us possibly some more entries before taking this upside trade again. Moving into NVIDIA right now, up about 0.78%, looking quite good, not gonna lie, on NVIDIA, guys. Very, very strong, right? Daily uptrend continues to be in motion, higher lows are set, new highs and new all-time highs putting in yesterday, but just today, fairly muted, right? Inside candle with yesterday's trade. So the daily uptrend simply continues, guys. The bulls are in full control. Next resistance is your 150 psychological. And to the downside, pay special attention if we retest 128.67. This low right here. If you lose this area, guys, well, you lose the daily uptrend coming into big support, 119 to 115. And you know that if you lose the daily uptrend, most likely we're looking for a little bit of weekly consolidation, At this point in time, the bulls have tons of space, anything above 101, looking for the weekly higher low for further trend continuation. So even if, guys, we lose the 128 and it loses the big support level right here, daily downtrend, what are we looking for? Weekly higher lows, and I will be waiting, guys, down here roughly at the 119 to about 115 level, looking quite good. This level up here, guys, is the 130 down to 126. I think I said 119, 115, 130 to 126, first line of defense. And then the big one on the weekly, in my opinion, is 119 to 114. Come a little bit lower into this area, and I will be sitting here with some short puts to play that volatility. Moving on further, Tesla having its most volatile week in its entire stock's history this week, right? Very, very, very volatile, right? 20% swings up and down. Just kidding, of course. Tesla is doing absolutely nothing, which is not a bad thing, right? After the robo-taxi event, it's obviously not a good thing, but it can also be interpreted as not being so much of a bad thing, right? Even though the event was kind of a sell the news event, well, we're not getting much bearish follow through. That may because people are waiting until earnings, which are next Wednesday, to position further in or out of Tesla, but definitely not the worst that the bears were not able to continue with downside momentum even after such a big drop. So as it stands right now, daily downtrend is still underway. Keep an eye on these levels, guys. 213, flush 213, daily downtrend simply continues. And then we look to our last line of defense right here, this guy sitting at 202. That is your weekly higher low. If you lose him, unfortunately, you lose all weekly momentum, you lose the weekly uptrend, and you open the doors for the bears to do something like a lower high into possibly lower low. Keep in mind, though, we are in a very large area of support right now, 220 down to about roughly the $200 range. I personally will not be playing this one much before earnings. Usually Tesla moves anywhere between 8 to 10% after earnings, so that's very, very volatile. I would love to play Tesla, guys. If Tesla comes down after earnings for XYZ reason, doesn't really matter at this point. But if they do come down, I'll be looking to play the volatility. Let's say they come down into the $200 range, maybe even 190s. I'll be looking to play some short puts all the way down here, 180 to 175, because this is actually where I would not mind acquiring more shares of the company. So that's where I'll be looking to play some short puts with the volatility. after earnings. But as of now, there's only literally 3 days of price action left before earnings. So very, very tough for me to say what the market can do, right? Because they could get the daily uptrend going for the next 3 days, and then we have a 10% earnings move down, and it's finished, right? Same thing. The bears could take control for the next few days, and then 10% upside, and we're right back to bullish control, right? So I'd rather cover this one after earnings. We'll get much better insights into breaking key levels of price action, such as the 235 or the 200 psychological. Now, moving lastly into Palantir. Palantir, 2.31%. Daily higher lows are now set, guys. So Palantir, absolute monster of a stock, right? Daily uptrend is clearly in motion. They took a few days of breather earlier on in the week. And as I was saying, guys, healthy relaxation of the bulls right here, cooling down some of the overbought levels on the RSI. Daily higher low is set right now, and looking for the continuation of the daily uptrend. Key level of resistance, guys, is going to be the 45 psychological, and then it becomes 50 psychological, of course. However, in the event the bulls fail this all-time high level and possibly roll over. Well, this isn't the all-time high. I mean, we did hit higher highs in 2021, but as I've shown many times on the channel, you know, the price never closed there. This was like intraday trading, right? You can see it's just wicks. So even though it was the all-time high, I wouldn't say there's much resistance up there because the bulls couldn't really close a candle up there in the first place, right? This price action is much more suitable because we have been, I feel like I'm scrolling forever. Geez, let me put this on the weekly and zoom in. So I would have been scrolling forever right there. So see this, we actually have some real candle closes in this level. So that being said right there, guys, in the event we fail and roll over, is it the end of the world because we lost the daily uptrend? No, well, zoom out, right? Well, at that point, what we'll be looking for is just very healthy weekly consolidation. It's been 6-7 weeks of glorious rally, a couple weeks of Palantir taking a break, never hurt anybody. They do it all the time, guys. Few weeks after monster moves up, few weeks, sometimes more than others, depending on market conditions, of course. But Palantir could have a healthy, very healthy 2, even 3 weeks of retracement, back down, touch the 12 EMA, 39 down to 37, and have so much space above our higher low, 29.50, to set up the weekly higher lows and go for another leg of weekly uptrend, right? So no red flags at all. The bull's still in very much full control right now. It's just very, very tough to start a position up here. And this is coming from myself. I've been a shareholder. I bought the dips, and it hurt for a while, guys. My average cost is down here in roughly the mid $11 range, and I'm still holding. I'm not selling a single share, but I will be honest with you, as a Palantir shareholder, I'm not really motivated to buy any more shares up here. I don't care increasing my cost basis, right? A few times I was making some plays on some shares, but I need to get a decent pullback to get some of those swing trades in motion right now because the stock is expensive, right? So we have to be a little bit careful in terms of our positioning, especially for shorter term swing trades, right? Because we know eventually it will consolidate for a few weeks. And the last thing we want to do is get trapped at the top and then be in this one for a few weeks or maybe even a month until it possibly recovers again. So that's how I'm viewing Palantir. That's pretty much everything, guys, in terms of our daily market rundown. So hopefully you appreciated that. Now let's dive into some of the positions that I'm still holding for next week, right? So taking a look, guys, first things first, let's go over some of the positions that we closed, and it was a very, very good week. A few of these I updated you earlier on in the week in the Monday or Tuesday session. So the one that is being called away today is TD Bank. We wrote these early on in the week, guys, and you can see right here, TD, we wrote these for 22 cents, roughly 0.5% for the week. This stock ended above 55 for today. So we get just pretty much the position ends up worthless and we just get to collect all the profit. Great win on Elf Beauty as well. I covered that on the Tuesday session. NVIDIA, great win as well. I showed you guys that position on the Tuesday session. I held it into Wednesday and then we closed it for a 72% win. Was just de-risking prior to TSM earnings. The Google trade, I showed you that one on Tuesday as well. BITX, showed it to you on Tuesday as well. Beautiful wins. And now our second BITX position, this one right here, the shares that we had right at 27.09, we wrote the $27 calls for about $1.22, 122 bucks. We now get called away. Juicy ROI, guys. 4.3% in 1.5 weeks on a wheel trade. Can't be mad at that, right? UNH, I'm pretty sure I showed you guys that one as well after their earnings that they had on the Tuesday session. Quick little swing trade in and out. Easy peasy, guys. Bought the lows back here on Tuesday after earnings. Closed it literally Wednesday morning when it came up into our resistance area right there. Easy little swing trade, all said and done within the first day of trading. Google call debit spreads, closed those on Tuesday as well. I think I showed it to you guys. 16.5% ROI. Granted, we have been holding them from September, but a win is a win, and 16.5% is pretty good on any options, right? Especially longer dated options. Netflix, we closed our last Netflix. You may remember I've been closing these in batches all throughout the last few weeks. So the Netflix trade, guys, was a banger. I held the last one through earnings, and we literally closed it shortly after the open. I didn't close it all the way up here. Could have gotten much better prices, but I was happy closing it literally at the open in the first 5 minutes of trading right there. Very, very, very good trade. All of the Netflix trades have been profitable. You know, the call debit spreads, right? We had 4 contracts, and I was taking profits progressively. We got them all the way. I'll show you guys where we picked up the position initially. So this one was a very easy trend continuation trade. Higher lows into daily trend continuation. We took the trade all the way pretty much back here. So break of the range of resistance, retest, and then we ran, took some profits here, took some profits here, and then took the last batch of profits after earnings today. So very happy with the way that trade played out. And waste management as well. That one was closed too, and I think I showed you guys that one on the Tuesday session as well, if I'm not mistaken, right? But waste management, super easy trade. I showed this one on the channel publicly a bunch of times, right? Big support range right here. All the moving averages as confluence, 200-day moving average curling up. So essentially very, very simple. You buy the bottom end of the support range and you sell the top end of the support range. And that's exactly what we did with waste management. Super solid company, very easy trade, easy peasy in and out. Now, moving on to the ones that we do still hold for the remainder of the week or into next week. Well, we bought the dip on ASML, guys, a few different ways. We bought this one directly after the early earnings surprise, and we bought the dip too early, right? So I didn't have the perfect entry, but as I was telling most of you guys and the people in the Discord as well, this one was a first initial entry point, right? We bought the dip and then the dip kept on dipping. So we bought it right around, I would say right around here around the 745, and then it kept dipping the rest of the day and even dipped the day after. Thereafter, I added some shares, guys, all the way down here at 688. So now we are staggering the entries. I still haven't added to the call option contract. We will be doing that when we get the daily uptrend back. But as for now, I added some shares and the shares are up nicely right now. We got them at 688. So they're up nicely, and which is pretty much offsetting the loss that we have on this bull call debit spread. But there's so much time left on this call debit spread. I'm not really worried at all. ATD, this is still a wheel trade that we've been assigned. Now, ATD, granted, I've been trying to farm as much premium as possible since being assigned. My average cost is 77.46. Just looking for a little bit of a pop on the stock to be able to write some covered calls in that area. Not too worried at all. Very, very solid Canadian company. Nothing to see there. BITX, that gets called away. I'll be looking to wheel more Bitcoin positions into next week. Looking for a dip though, right? Always taking profits, guys. I took my profits in the Bitcoin trade early this week just because, right, we are coming into this very, very large area of prior resistance, right? So I never really want to be buying into the resistance, even though we have a confirmed weekly uptrend right now, even though everything is looking good for the breakout. Well, we may just come into here, peak into the area, and then fall a little bit back into 65. So I'm looking for 65, 64, a little bit of a trend continuation trade, right? Pull back higher low into possibly a second attempt at breaking this out. That's what I'm looking for more Bitcoin position trades. CrowdStrike, I've shown you this, guys. I've shown you guys this trade a few times in the past. So this one, we took it pretty much back here, right on the retest. So weekly uptrend, weekly retest of the lower area right there. We took the trade around the mid 280s for some follow through continuation and going for the gap fill, right? So that's what we're looking for. We took profits last week. I had some options on this, some call debit spreads, smashed it, right? But I kept the shares because the take profit on the shares, I'm waiting for the gap fill at least 330s area. So I'm waiting for that on the shares. But so far, I mean, we're up, right? Bottom at around 286. The Disney trade, that's a longer form trade, but we're up on both the shares and the calls. Sorry that everything is kind of grayed out right now, but you can see the gains right here. It's just because the market's closed, and I think my session expired. So if I refresh the page, it's just going to log me out right now. It's kind of annoying, but that's what it is. EVVTY, I think I showed you guys this trade. EVVTY is, I showed you it on Tuesday, I'm pretty sure, right? So you bought the dip on this one. This one, extremely solid company, guys. The fundamentals of the company are very, very, very strong. 1.13 peg, insane net margins, similar to Visa and MasterCard, 50% net margins. Company's expanding extremely, extremely well. But this one is just one of those stocks that has beautiful fundamentals. It's just been out of favor just as of recently, coming into a very large area of support. So I love buying the dip on these, looking to possibly sell a first batch in the 105, second batch maybe closer to the 115, 120. So we'll see how those go. But so far, pretty much flat on the position. Still have the Google Leap, which is covered up, waiting a little bit longer, guys. I got a lot of very good premium on this. We're actually up on those covered calls because it hasn't moved in. Our break even on these is 171. So all I am doing right now is I'm covering the Google Leap because October was supposed to be very volatile, election season, October seasonality. And so far, this has been a profitable endeavor, just covering up the leap, right? No harm done in that. These Intel calls are long dated leaps. I've explained that position a few times. Intuit, still in the Intuit trade, no change there. So this one is still the same thing we're looking for. Support area and targeting a rally into the area of resistance. Very, very solid range of accumulation right there. Nothing big to see there. Louis Vuitton, I told you guys after their earnings that I bought the dip on this company as well. We are now up a very decent about 5% on those shares. Really bought the lows. We bought them at about 128, stocks around 132 right now, looking for some recovery. Microsoft, here's my positions on Microsoft. You can see I have not added to them, have not subtracted from them either, right? Still open, roughly open in the same area that we are today. And as I said, if Microsoft drops to the lower 400s, I'll be adding even more. And there you go. There is the log out. So you weren't supposed to see my username or the length of the password, but at least you guys can see I'm logging into a live account, right? So let me just log in, guys, because as I've explained previously, if I edit this portion of the video out where I'm kind of logging back in, authorizing on the phone, it takes 30 minutes of extra processing time to put it through the editing software, compress it, export it to 1080p, put it on YouTube, yada, 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 right? So I'd rather just log in right now and film this one straight through. So as soon as I'm finished, I just take the video and upload it right away, right? Anyways, there's not that many more positions that we need to cover in the first place, right? So here we go. We're back in. Nice. So where were we at right now? So I think I've lost a few of the positions, but that's literally right where we were kind of, right? So in terms of let me just redo this holding list right here. So that's where we were. So Micron, these are long-term leaps, asymmetric bet. We're up nicely on them. You can see the percentage gains already. NVOs, this is one trade that we're at a significant loss at. I've explained it a few times on the channel. We'll be waiting. We still have until the midpoint of November. I'm going to hold these for earnings, guys. We've lost a lot of this contract value. This was a swing trade gone wrong. I've acknowledged that, I overstayed my welcome in this one, guys. Even if you guys see a ton of wins from me usually, and I'm very careful and very diligent on taking my stop losses, this one is one that I should not have taken in the location I took it. Took it right here, should have been waiting for the larger area of support with the 200-day moving average and stuff like that. Did not take the trade in the right location. And when it broke our weekly areas and it gave up the daily downtrend, I should have closed the trade right there. But I figured to myself, it's NVO, they're all the craze recently. So even myself got caught up in the hype cycle of NVO. And that was a bit of a mistake because thereafter we lost the weekly uptrend and now we're into a weekly downtrend as well. So I figured, we're already down so much on the contracts. I don't want to average in anymore. I'm going to hold these for the next couple of weeks through earnings. And if we can recapture a little bit of this value, so be it. So this is one that has went wrong. You guys don't see me take big losses that often. And this is definitely one of them. Not saying I'm perfect. Everybody makes those mistakes. The key point is identifying what you made as a mistake and not repeat it, right? So you guys see me take a lot of trades. Most of them are all winners, but every now and then, even myself, there is one that just gets away from me. I get a little bit stubborn with it, and there you go. But at least there's good position size management, right? At least this position size is in line with all the rest of my position sizes, so it's not an outsized loss. Now, we took one more wheel trade for ON Semiconductor. This one is for next week, $64 puts. You guys have seen this one a ton on my top 5 options plays video, right? Huge week of support, huge area of support, guys. 64 is the 200-week moving average, and we have about a 6.5% margin of error until assignment. We got our 0.5% rule right. 32 cents is what we received for a $64 stock for next Friday. So that one's looking quite good. Still have the OXY wheel trade right here. Our average cost on OXY right now, I'd have to double check. I think it's 53. Let me just check our assignment tracker right here. So I think it's, 53.47. So I mean, we're not down on it too much, but this one definitely moving a lot slower than expected. Logical though, unfavorable season for oil. We got assigned in the worst season for oil, very unfortunate, but in the process, we did close one of the call options that I have for March, and we closed it at roughly a $200 gain. So that's largely making up for the slight loss that we have right now, but I'm happy holding this position, maybe even averaging down. Other than that, guys, the square calls, these leap call options performing very, very, very beautifully. Going to ride those, possibly even until we get in the money on those, looking good. And then we have a suite of hedges. Well, let's just cover the TD Bank one first. This one expires. That's what I showed you early on in the video, right? This one expired today. The stock's over $55. We just get to pocket all the premium. Another wheel trade done successfully. SQQQ and all the TLTs, guys, those are all the hedges. So this right here, usually I run about $100,000 in long exposure in the portfolio. This right here is 10% hedge because of the bear thesis, right? The recession thesis, the economic uncertainty thesis, the geopolitical concerns that we have right now, all the negative factors that are kind of in the background right now. This is the hedges that I have in place for them. So SQQQ, it's no problem that I'm down on these. I expect, as a matter of fact, to be down on these guys. This is why it's a hedge, right? If these would be up, it means the entire rest of my portfolio would be down, and I'd probably be losing a lot more money on the rest of my portfolio than I'd be losing on the hedges. And mind you, most of this $10,000 in hedges, guys, is 100 shares of TLT, right? So even though I have roughly, let's just call it, it's roughly $12,000, $13,000 of exposure, right? About 10% of the total exposure I run, about 120K is what I usually run. 10% of total exposure. Most of that is assigned shares. And my assigned shares on TLT, after collecting a few dividends and after doing a few covered calls, my average cost on those TLTs is 97.15. So we're not really that far off, right? Yeah, we're at a loss, but it's okay, guys. I'll manage the position. The ones that are most at risk are the shorter term call options. Not too worried about the June 95 calls right here. So the ones most at risk of losing money are the SQQQs for December, $8 calls. They're not even that aggressive. And the TLTs for January. These right here were in the event that the Federal Reserve panics. This is kind of like a lottery play on TLT, but you can see I really didn't put that much money into it, only about 150 bucks, right? So that is the hedging strategy. So normal that we're down on it. But as I said, most of this is in shares, and these shares don't expire, right? Eventually TLT will come back above because of the rate hiking cycle, just natural. So that was a long-term overview of all the positions in the portfolio. I usually do a longer recap on the Tuesday and Monday session. Usually I only just run through the new plays for the week. So hopefully this explains the rest of the positions that I have in the entire portfolio. So far, so good though, guys. So that's pretty much everything for today's video. If you want access to all of these trades, as you can see, we do the weekly wheel trades, the long dated wheel trades for pulling premium forward, shares and call options. As you see, all the other trades, the long-term investments, even some lottery trades, all my ideas, the live streams, the private videos that we do for our members as well. And talk to me every single day and ask me any single question you want, whether you're a beginner, intermediate, advanced trader, shares, advanced option strategies, anything you want. I'm there for you guys every single day and all day. So if you're interested in the Discord, guys, always feel free to click the link down below in the description to get more information on that. And if you don't, well, guys, you can always consider liking the video. Would really appreciate it for the growth of the channel. And second, consider subscribing if you're new. We do these videos every Monday to Friday after the close. And lastly, if you have any questions at all, guys, always feel free to ask me down below in the comments. Anything you want. If you want me to look over a certain ticker, or you want maybe a second opinion on an options play without being financial advice, of course, or discussion about the macroeconomic environment, risks of a recession or stuff like that, always feel free to leave me a question down below. Usually I answer you within the first 24 hours. So it's been a pleasure, guys. As usual, great week again. Hopefully you guys enjoyed it as well. Take care. See you guys over the weekend. I'll do a couple videos this weekend. So take care and peace.